Morgan, because it's been such a fantastic year, and as you said, the Nasdaq has been strong. Technology has led for most of the year. It's up 44%. We've owned a lot of those stocks, but you don't want to push that trade too far. So some of the names that we like are growth names. Home Depot is such a name. We like Sherwin-Williams. We like United Healthcare. Those are stocks that have been good. They're growth stocks. But you also have some upside even with the reopening. And on the reopening side, we've got Booking Holdings, AMT, which isn't a reopening stock. It's the cell phone company, but it's one that's down this year despite having a good environment for business and for their general environment, because people are on their phones all the time, and 5G is going to help, and the weak dollar will help. And we also think Boston Scientific, a device company that hasn't been able to do a lot of surgery because they've stopped all surgeries that were, quote, non-essential, even though I suspect for heart patients and their doctors, a heart surgery is essential. So those are names on both sides. We're using both the strategy of staying with growth, staying with some of the tech that hasn't gone up too much, and also continuing with some reopening names that, again, have not gotten ahead of themselves.
Yeah, it's just interesting to hear you talk about the housing piece of that portfolio and those picks as well. And Joe, I'd love to get your thoughts on that, especially when I hear something like Home Depot and Sherwin-Williams. I mean, it's been such a strong year for housing. Is the expectation we're going to continue to see that next year, especially since inventories are tight?
Well, first of all, Morgan, welcome.
Thank you.
It took you long enough to join us on the halftime report. I love Carrie's strategy because we've had so much in prior months about investors being forced into this binary decision. You either need to turn left in your portfolio or you need to turn right. I want to stay balanced. I want to be in the middle. That's exactly what Carrie is doing here. She's got growth. She's got value. She's got healthcare. She's got technology, and yes, she has exposure to housing. And to answer your question, Morgan, as long as I know the Federal Reserve is going to continue with his historic accommodative monetary policy and private sector borrowing costs are going to remain low, then housing, given that we have a very tight inventory to begin with, housing is going to continue to be supportive. Now, in certain regions in the country, you are going to hit the ceiling in terms of pricing, but there is enough demand out there and there will be enough opportunity that I think housing will continue to work, maybe not as strong as it did in 2020, but it'll continue to have a bullish trend in 2021. All
right, so before we move on then, Joe, what are your specific picks this year?
Well, I'm emphasizing exactly what Carrie's doing, and I'll introduce probably the investors' best behavioral word, and that's diversification. And you think about coming into 2021, Morgan, I'm sure you've heard it in many of the interviews that you've conducted. Well, we want to be invested. We believe that the environment is a good one to be invested, but we think a correction's coming at some point, right? We hear that from everyone. That's the overwhelming consensus. Well, what do you do with that in reality? I think what's important is that you're diversifying by asset class. You're not getting out of fixed income because you're going to need taxable fixed income in your portfolio. You're looking geographically, not just looking at the United States. You're looking at equity size class. You want large caps, you want mid caps, you want small, and you're looking strategically as well. So I'm still going to hold on to my mega caps, Apple and Microsoft. I'm going to hold emerging market debt. Think about that for a second. Having exposure outside the U.S. and having exposure to taxable fixed income, and I'm doing it through an ETF, which is EMB. 20% of that EMB has exposure to oil-producing countries like Qatar, like Saudi Arabia. So I like that strategy. And then in addition to that, I think the trading environment is going to remain volatile. It is going to be a continuation of what we experienced in 2020, where the average for the VIX was 29, which was double the average over the last 10 years, where it was 15 or 16. So within financials, who benefits in that trading environment? Morgan Stanley, Goldman Sachs, that's my exposure. And then lastly, electric vehicles are very popular. Well, I'm not allocating specifically to electric vehicle producers. I'm going second derivative. who's putting the technology into these vehicles? That takes me to Sensata Technologies, ST. It's a name that I've recently purchased, and I will hold it for 2021.